Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV opening commentary for Monday morning, August the 4th. Good morning. Hope you had a great weekend and hope your day's off to a good start. Full trading week this week as no holidays are interrupting the trading schedule. We have supply and demand report out a week from tomorrow, and rest of this week looks to be crop progress, of course, and export sales, export inspections this week, EIA report. Other than that, just routine reports coming out here today. So let's take a look at what our news is to start the week. And coming out of the weekend, we'll be talking about the markets on RFD TV this morning at 8:15 Central Time. Natural gas down this morning a little bit, a couple percent, kind of matching what the crude oil is doing. Market's back in the mid-60s, which is not really a surprise. We spiked higher off of the headlines that President Trump was looking at putting sanctions against Russia. But now we've resumed back into the trade prior to that, as there's not been any additional commentary or headlines to talk about in regards to those sanctions against Russia. So we seem to be finding some middle ground in the mid-60s, and that spike into the low 70s. Right now, looks like a selling opportunity. Natural gas is down, as I mentioned. Dollar index is lower. We'll look at the trend in the pattern in our closing TV segment tonight. Stock market rallying. We saw a couple-day drop Thursday, Friday, and now we're seeing a nice recovery back $6,300 level. Gold and silver a little higher, while corn's down a penny and a half, beans off fractionally. Still some spread trade between meal and oil share, as meal coming off contract lows, closing at over $1 higher, oil down, and wheat 2.25 higher. Kansas City up 0.75 cents. That's after making some new lows overnight, and nice to see a recovery here in that wheat futures. So let's get into some of our news and features here. Follow us on Twitter, Midwest Markets and Brian Hoops, and make sure you check out our website to sign up for our newsletters and text service. Twitter feed links are there at MidwestMarketSolutions.com. All right. Other news here, 6-10 day forecast, still looking for that moderate temperatures above normal precipitation. Could get a little bit warmer maybe than normal, but it's really overall a bearish forecast, as the grain markets are nearly ideal for soybean pod and ear fill for the corn. Just not any type of a negative forecast at all. This looks to be just nearly ideal. Markets can, grain products can withstand a little bit of additional heat, especially if they get enough moisture along with it. And 7-day forecast looks like a lot of rain in southern Iowa and northern Illinois over the next 7 days. Seasonals here are lower for the grain markets, and that U.S. dollar index is still trending higher, but we're going to look at that trend and how it could possibly change in tonight's commentary. But right now, the grain markets, seasonals are lower for all the grains, and that as well as energies. Crude oil market seasonals are lower here. Corn has technical support, 407.5. We didn't test that overnight, but we got to 408.5. November beans have support at 971.5, and we're still a dime away from that. On Friday, Silvacon cut their Russian wheat production figures from 83.6 just slightly down to 83.3 due to lower than expected southern yields. That's now slightly below the current USDA's estimates. On Friday, USDA reported census crush numbers, and in June it was 197.1, slightly above estimates, but is down from the May number of 203.7. That's a solid 7.5% above year-ago numbers. So easily a new record for the month. And when we have big crush like that, you usually have big meal byproducts, and we're seeing very tight bean oil stocks. They are historically low in this report. They are the lowest for the month of June in the last 20 years. Cash cattle trade in the north and the south last week was moderate. In the north, we saw $3 to $4 higher than last week at $244 to $247. Dress trade was $5 higher at $385. And in the south, we were $235 to $236, $3 to $4 better than last week. Very strong cash numbers. Cutouts were down again several dollars in both choice and the select, and that keeps those packer margins deeply in the red at almost $300 in the red. Let's take let's just sign off here and wish you a great day of trade. Good luck and good trading, everyone. We'd be glad to talk markets with you. This has been Brian Hoops. Have a great day.